recording on here and start sharing screen. Sorry, I'm slightly late on. Talking to someone. Hi, Jonathan. Hi, Heath. Let's come out of that. Hello, hello, hello. Okay, so just close down a couple of things. Right, so Connor and I, before this call, he drew my attention to the fact that there was a new hang on, just mute people out, thanks. Please feel free to ask questions, no problem at all. We can leave it to the last 15 minutes at the end. New scan on GCAD, massive scan, so we were looking at that together. So that C to D leg, which makes a very strong scan of over 1,000 pips. So as we know, GCAD can be a very wild pair. Anyway, you do usually have to have a big stop loss on it. Okay, so let's just have a look at that, because what I've done is mark it up. I didn't get into it, but I have marked it up. So the reason I've marked it up, now I'm on the 1 minute chart. Now some people think because I'm entering on the 1 minute, I'm using a 1 hour time frame analysis with a minimum of 80 pips, the C to D leg of the scan. And the scan must have solidified by 20 pips off the D point. That's to give me the best chance of success. And then in the direction of the scan, only taking in this instance a sell until it goes down to the median point, which will be halfway down the scan, which is this unbroken green line down there. So those are my rules, and particularly when the market is like this, it's important to stick to the rules, the 3 confirmations, and those confirmations are here, this trade sheet, which I've loaded up, trade sheet version 2. It's in the files section of Ninja Forex Traders. And welcome, by the way, if you are on our 7-day free trial. A really great time to be joining, beginning of April, May, June, fantastic market time. And as we know, markets are a bit crazy, but you've got to expect to live with that. They're going to be wiki for a long time to come as the new normal, and also fast moves in a short number of minutes. So increase your stop loss, or make sure you stick to your rules and your confirmations. Re-enter trades, even if you lose a trade, get into stop profit as quickly as you can by 1 pip to cover you on your broker spread and commission. And if you stop profited out, there is no shame in that whatsoever. Look to secure your money, secure the bag, and get back in. But always follow your rules, because you've got to trust your rules, particularly in this market. So I must have a pitchfork touch. That's my criteria there. We tick that, and then 2 of any of these confirmations here. Quarter theory, and if you want to learn more about quarter theory, the person I learned it from, Chance Gonham, who is Sharpshooter Channel 20 on Go Live. Look for the favorited videos and watch the first 6. You will see one. I think I posted a picture in the group because someone asked yesterday or whenever it was about quarter theory. There's
who's the educator there? Sarah? Chance?
Yes, Charles.
Charles.
Sorry, Chance Gonham.
Chance Gonham, okay.
Yeah, Channel 20. The first 6 favorited videos. There's one called Quarter Theory and 62 EMA, and he goes through. This is who I learned all this from. He goes through quarter theory on there. So there's one video called Quarter Theory and 62 EMA. Then there's the 1 minute trend break and retest, the channel touch, and then the fib retracement, the 88.6, which is his favorite. That's the long extension leg, which we've just seen on GCAD. That one going up from C to D, that is off an 88.6. That is the 3rd wave of the Elliott wave. That's the big one you're looking to get. So that's his favorite. People have different fibs, and the other one is the 61.8, what they call the golden ratio. And then for an exit, here 2 flips on the hull. That's the multi-time frame analysis. the one where I showed you the bands in the background. So those are the confirmations, and then a trade goal and a daily goal. We're looking for 20 pips. So people often think that, and that's how wild GCAD is. It's going right back up to that D point. People often think this is a scalping strategy. It's actually, as Chance calls it, a hybrid strategy. We're using the 1 hour time frame analysis, but we are entering on the 1 minute to get that precise entry. So I drew this up for you just before we came on to show you how we get multiple pips. Now, unfortunately, GCAD, which is a wild pair, has gone back the other way at the moment. But it did break under the 62. The last 10 minutes of the hour, this is the open of New York that we're in, the blue band at the top, you will get fake outs. So it's done that to take out our stop losses. But this is a strong downward scan, and it will be coming back down. But you do generally need, I've put 15 pips on that. I'm not in this trade, I've marked it up for you. But GBP pairs, you generally need 15 pips, not 10. But there's your 20 pips. Now, if it will come back down the other way. So once you've got in, say you've got in up here, let's move this further up. It's going to be a bit slow. So once it retests again off that D point, unless it carries on going up, and who knows, but at the moment that's its break and retest off that D point, which is the strongest entry that you can get. So let's say we get in here and we're going to go for our 20 pips. Well, it should go down 25 to that quarter theory. Then once it's done, a break and a retest of a minimum of 10 pips. Now, sometimes price just breaks straight through, as you know, it just shoots down. But let's say it's going to do this 10 pip. I mean, that's a bit bigger, but let's call it a 10 pip break. Then you can stack in. So you re-enter, and this is where we're not scalping. We go for a lot of pips, but it's the highest profit ratio, because some people swing trade and they just stay in one trade all the way down the scan. But that is not you securing the bag for the wild swings and the Forex factory news. So some people might take 130, 150 pips off one trade, but we're taking like 1, 2, 3, 4, 5, 6, 7, 8 trades all the way down with a high percentage return, and stacking in and securing our bag the whole time as we go, which gives you such a feeling of confidence and security as a way to trade. That, I mean, it does depend on your psychology, but I just cannot do that swing trading. And this means that you can work off a very low, relatively low stop loss, although GCAD, as I say, is a wild pair. So if I get in this trade up here on this break and retest, follow it down, and as it does the break, and so I'm securing the bag as I go, as soon as it's gone 10 pips, I'll put that stop profit in here, just in green by 1 pip. So I'm covering my broker's spread and commission. So if it does wildly swing back on me, then I'm stop profited out, all well and good. I haven't lost any of my money and I can still re-enter. So then I start to pull it down, keeping it varies according to which pair you're in, obviously, keeping it above the 62, giving it some room to breathe, because it can stop you out if you put it too tight. That's happened to me a lot over the time I've been trading. So keep pulling it down, and then once you've bagged your 20 pips, you then, on the break and the retest of this quarter theory, for example, don't bag the pips, leave this trade running if you're stacking in, because you're now risk-free. You're pulling your stop loss down, you're in stop profit. You enter a second trade on that quarter theory after the break and the retest. So you are risk-free entirely, because you've got your stop loss that you're pulling down all the way. So if you've now got 2 trades open and you've got 50 pips there, and here you've done about 75, say call it 75. So you've got 75, which gives you a risk to reward of 1 to 5. And here you've got 1 to 3. So you've done 75 plus 50 is 125 pips. Just by doing that on a 1 minute entry with a stop loss of 15 pips there and there, and no drawn down on either of them. And you can keep entering all the way down. And once you're past the median, you can do the same thing on the way up. You know, you could be taking buys. So you could just stay in this one pair. Although, as I say, GCAD's not for the faint-hearted. It's a bit. I've lost quite a lot of money in the past on GCAD because it just goes so wild on you. Like now, I thought it was going down before we came on, and then it went right back up and tested the D point, which didn't surprise me. But I thought, oh, it's gone too far. It's a big scan. It's not going to do that. And sure enough, it did. And it moved. It moved. How many pips did it move just before we came on? It moved 40 pips. 40 pips in the space of not very long, about 10 to 15 minutes. You know, that's how wild it is. So I hope that helps explain that this isn't just the scalping strategy of 5, 3, 5 pips, 10 pips on a 1 minute time frame. It's absolutely not. It's a hybrid strategy, and Chance created it using an amalgamation of different favorite indicators, confirmations that he learnt off people like Mike Miles. He learnt directly off Christopher Terry. He's been trading now 4 or 5 years. When he started on YouTube, it was just with Christopher Terry calling out trades. He's learnt off Christopher Derrick, you know, the really, really big guns in IM in the very early days of its formation. He's only 23, something like that. Used to be a fast food fryer on $8 an hour. And he now makes more he puts on bigger lot. I don't know what his lot sizes are and how much he's got in his account, but he did say something fairly recently, which was that he makes more money in a trade than he used to earn in a week on 40 hours a week, you know, doing his fast food frying. So you can kind of work it out from there. And he's built his account up literally from $40, and he got it up to like about $3,000, blew the lot, went to bed, they were cried, and then he formed these rules. And after, because he was obviously over leveraging, and he blew 2 or 3 accounts, and then he found this system, followed the rules, and has built it up very patiently ever since. And that's why he's a stickler for sticking to confirmation, sticking to rules, and very precise entries. And I find that gives me a lot of comfort, these precise entries. So you can, if you want to get into this trade, but you are still above the 62 and you are above quarter theory. And as I say, GCAD's not really one of my favorites, although I do like how big this scan is, but I'm a bit of a chicken. I'm quite conservative. I quite like fast trades in terms of not staying in them, but I'll probably wait for this to come down to the quarter theory entry and do something off that once price is below the 62, broken and retested quarter theory, and is well on its way down, although I won't have a pitchfork touch because it's such a big scan. Okay, so that's GCAD at the moment. It does move in New York, because I looked at it before. Obviously, you've got Canadian dollar. So, are there any questions? I'm going to write this one down as a watch list. Are there any questions on this one? Okay, I've done it. No problem. No
Sarah,
worries. Yeah.
One thing, I have been watching your stuff, but I need to go over 1 or 2 things. How do you set up your quarter theory? What lines? Can you just do that for me, please?
Yeah, sure. Yeah. Quarter theory is an indicator. So come up to indicators up here. And you want this one. It's called automatic quarter theory lines.
Basically, all I need to know is which ones do you blank out and which ones do you keep?
Oh, fine. Okay. Yeah. If I go to settings, it just on inputs, it's just as it appears, 100, 111. You want to take a screenshot of that. And then on style, perversely, you untick all the quarters, because that's the 25 line. Mike Miles does use that, but we don't. We're just using it at 50 pip increments, which is the half, the 50 pips, and the major, which is the zeros, because what quarter theory, and we do them all in the same color. Chance uses orange. I tend to use his colors because if ever we're sharing charts and we send them to him, then he, he's looking at what he uses sort of similar way psychologically. So it's all the major and the halves, and just orange all the way down is what we use. That's it.
Yeah, I just got a bit confused because when I went to do it, I saw quarter and I thought, oh, quarter theory, that's the one we need.
I thought that at first.
It's the other way.
It's the other way. Just these little extra things designed to make our thinking a little bit more difficult. So
okay, thanks, Sarah.
Yeah, so quarter theory is they're all similar, their importance, and any currency will make its major move as 1,000 pip range. So this is I haven't looked at the figures on the right hand side. That's 166,000, I think. Can't quite see it myself. Might see it better on here. Up to 176. So somewhere 165, 1660. That's anyway. It's 1,000 pip. That's 1,000 pip move, and every currency makes its major moves in 1,000 pips, apparently, according to what I looked at on learning quarter theory when I did look at some of that YouTube stuff. So that's GCAD. I'm just going to write down this one here, which is an entry of whatever these figures are here. Let me go to my settings. So I've got an entry of 1.76258. I'll try and tidy it up afterwards if I can do that. 1.76408 was 15 pips stop loss, and then a take profit, but it's going to move down more than that. But you've got to watch for those swings back on your stop loss. That's the problem with GCAD. 1.75495 is your 20 pips, but the 20 pips is set above quarter theory, and it price, as we know, moves to levels, so it will want to come to that. It will come to that 25 pip range, but it's always, as we've seen, a question of how much it's going to swing back on you the other way, which is why I say as soon as you can, get your stop loss after any of the pairs we work with has moved into move 10 pips. Then try and move your stop loss to stop profit by 1 pip to cover yourself on a risk-free trade, because it's far better to be stop profited out than have price in these markets reverse back on you really suddenly and take you out for a full 15 pips. Okay, so that's GCAD is coming down now. That's GCAD. So is there any pair anyone would like me to look at, or anything you want to scan on, or anything you want us to look at?
Yes, please, Sarah.
Yeah. What have we got?
USD, JPY,
UJ. Let's have a look at that then. When did I draw one up on this? I had it open, but I haven't. Sorry about these glitches. This is purely trading view doing that. So I haven't actually looked at this one in detail today. Let me just check the scanner. Did you see any new scans on it? No, this is the one I had, I think.
As you can see on that, it's revisited the D.
Yes, yes. So that's good. That's good if it's done its break and retest. So the scanner, you can, as you know, you can take a trade off the scanner here. So it is at its 656647. It is at its entry point. So that will have triggered if you were doing a 25 to life, I would have thought. So let me just check I've got the same scan. 27th of the 3rd at 10. Just see if make sure it hasn't moved. 3rd at 05. make sure your time zone is the same on here as on TradingView if you are moving it over. And people think that trading is exciting, but actually the thing about trading is it's desperately boring after a while. So which is good, because it just means you should be automatically following what you're doing and not getting too into it, you know, not getting too attached to it, because that's the whole point of it. It's our work. We're in the pros because we've decided to invest in this. We're already in the pro team, as Chance says. And what we want to do is come to the charts, get the money that we need to make the living that we want, and then come away from the charts, or have your Netflix on, or your gaming machine, or whatever else you're doing around you. That's the whole point. If you do, it's the only industry where if you spend more time on it, you'll get less out of it, because you get too embroiled in it, too deep down into it, and too emotionally attached to wins, losses, and stop profits. And, oh, why did I get stop profited out? Why didn't I make that 20, 40 pips? I only came away with 1.5 pips, you know, and stuff like that. When actually you just want to be looking at what you're getting out of it. Have you compounded? Can you keep adding in each week or each month another $50, another $100? Can you keep popping some money into your account to then escalate that compounding process as you grow your brain psychologically? Because I have trained myself now, and I've started doing it months and months ago, that I do not ever look at the money figure in the bottom of the MT4. I look at the process, I sometimes look at the pips, and I look at what my trade is doing. But if I start to look at the money, then I don't like that. So I never look at the money myself, and I found that quite effective. So USD JPY is here.
I asked for this one, Sarah, because I'm actually in it now.
Oh, are you?
And I got in at the D.
Oh, well done.
And I like that red line,
so
red candle that's developing.
Right, let me just take some of this off. 30th of the 3rd. So there is a new scan, isn't there?
Is there?
Well, I don't think this is the scan. Is it the last one I've got? The D point? Yeah, there's a new scan. So I just need to get rid of some of this so we're not looking at all this stuff on it.
Yeah, I'm in the new scan.
Yeah, good. Some pairs I find over the months have many scans, and others I don't have many at all. So it just depends what the scanner's throwing out. Right, that's better. So let's just, so I'm on the hourly. I've got the same time zone. Here's the scan. So that's looking very nice for you. And as it's a sell scan with the D point at the top, we're looking for the X at the top, the 5 reversal points. So I want the first one's the 27th of the 3rd. That's going to be up here. And I did check Forex Factory. Always check that to see what news is coming up. There wasn't any today. So 26th. There's our 27 there. High. So we're looking high to low, to high to low to high. That's how it's going to look. So come over to your scanner. You can put the brush marks on, or you can do it like this visually. Neither is right nor wrong. It's just how you like to look at things. The 30th of the 3rd at 5. That's going to be that one there. 30th of the 3rd at 15. That high there. The 30th of the 3rd at 17. And the D point there at 3. I'll just put the pitchfork on because it'll help me show you where the lines of support and resistance are. X to C to D. And I like to have the pitchfork, the new pitchfork, in white. So once you've got that on, and that doesn't look very good, that should be up there. Have your magnet on. So once you've got that on, just go back and check before we come down to the 1 minute to check the points are on. The other thing is I haven't got the extensions on the pitchfork. So I'll show you those settings. I don't know why they're not on. Oh, that's because I've got, this was because we were doing, that's thrown me because we were doing 25 to life yesterday. So I'm not sure I'm going to remember the settings on my pitchfork properly. I'm not going to remember them without finding another pair. So let's have a look at the settings. Right, well, this is the problem. I've got 25 to life. So I must remember to take it off next time before I come on this. I think it's, oh, it's defaulted to everything I've been doing. That was something in the early hours of this morning. Right, where am I? Not sure I can find my fib settings that quickly. I don't suppose anyone's got them, have they? A screenshot of Chance's fib settings. Oh, well, anyway, I can probably do it. Can I do it without the pitchfork for you if you're in the trade? USD CAD. Let me just have a look. If I got an old pitchfork, let me have a look there. No, lost all my pitchfork settings. That's thrown me. Right, so let me think. Documents, trading. See if I put any under here.
So Sarah, are you saying that the 62 EMA is, it would be good to get your stop loss to follow that, or place your stop loss above
yes, but you can trail the 62, but leave a bit of a padding of 2 or 3 pips either side of it, because when I've trailed it and been on it exactly, it's often taken me out, and Chance says the same, and I've been stop profited out. Not sure I can read my settings.
I'm at risk free at the moment with this, but I could go a bit lower to cover the 62 plus 3 pips, you say?
Yeah, just remember what a wild pair GCAD is. Oh, you're on USD JPY. Well, that's quite a nice pair, isn't it?
At the moment, it's looking nice for me. Yeah.
Good. So USD JPY, I've got as a 6 out of 10. So that shouldn't be too wild, but it is quite a fast pair, I think. So 0.51, 1.5, 618. Oh no, I'm okay, right. 0.5, 1, 1.5, 1.618. Sorry, it's me getting in a model. USD JPY settings 0.5, 1, 1.618 and 1.5. And that is sorry, I was getting muddled up between that and the fib. My fault. So now we've got it on the hourly. Just need to come down to the 1 minute quickly and make sure I've got, go away. Make sure we've got it on exactly. So that's there. The B looks okay. A, sorry, that's way off. The C is there. Yeah. The A should be on that one. The B is fine, so it's low to high. And then just let that load. Put that up there. Go on then. I might have to zoom it in. Right, there we are. So then lock that on, and then you're always confident it's not going to glitch. Go back to the 0. So I haven't moved the pink pattern on, but that's just showing you the pattern. The important thing is that the pitchfork is correct. So I'll just look on the 15-minute and put on the other confirmations, and then we can come down to the 1 minute. So we've got a 62 to go on the 1 minute as shown, or as it would be shown on the 15-minute time frame, which is the blue one. So we can see that the 62 crossed early hours of this the 27th of March. It's been in a strong downward trend, and it's still under the 15-minute. Now, sometimes price will come up and test that 15-minute. You'll get a retrace. So I think I've said it on some of the stuff I've posted in the group before. Don't panic when you see that happen. As you can see, as we know, the market flows. And let's put our quarter theory on. Now, it's good because price is and look at the time. We're at 1:45. We're coming up to a 15-minute candle close. So at this point, I will have looked at the half hour, the 30-minute candle close. And remember, the market will fake you out the last 10 minutes of the hour, which is when you should expect a fake out to the other side. So don't let that panic you. So let's come down to the 1 minute and see exactly what's going on. And what have we got here? Well, this is quite nice because what we've got is we had that break. We had the break and the retest of that D point there. And you can see to the pip, it came down to the next pitchfork. It stayed under the 62. There it is testing. This is end of Tokyo session, testing the 15-minute, and then up to the quarter theory, wicks off the pitchfork, comes back down, doesn't quite make it to the 15-minute, back to the pitchfork, strong line of support and resistance, doesn't like it at that level, drops down to the 62 again, which it stays along. This is in London. And then it's coming to make a move at the open of New York because it's the dollar, so it's making another move. And we've got it strong downward momentum on the 62. We are below quarter theory. We've had a break and a retest of the pitchfork. So price now, its natural inclination will be want to come down to these two levels here. It could well come up and retest the 62. It might even come back up to quarter theory. So as it's broken and retested the pitchfork, if it comes back up again and then drops down, it's saying, sell me, please sell me. So I'm going to put it, because we're coming up to the hour. So there's your, that's very nice if you've got 10 pips, 10 or 12 pips the other side of your quarter theory and your pitchfork. You've got two barriers then to stop the market taking you out. And then down to your, I only ever put it at 20 pips because, as you know, that's always my baseline to bag my money, and then I can extend it from there. So it's looking good to carry on down to that next level. So
what's that, Sarah, please?
Yeah, I'll give it to you. Let me just 100. So your next level you're looking at for price, once it's done its break and its retest there. So the next level down is this 35 pip range at 108.077 is where the pitchfork hits, depending on how long it takes for price to come down to that level, because there's 35 pips down at 108.055, and then down to this wedge where it's in a price trap at 40 pips. That's your next level, is 108.000, which is your quarter theory line. So both these are lines of stalling out and possible rejection, or stalling out and carrying on, breaking on down, depending on also time of day, as you know, as New York tails off. And you can see it's got these wedge shapes here to get through either way. So this is, if I can remember how to draw this. I was looking for, no, can't remember where the rectangle is. Is it up there in the text? Geometric shapes, rectangle. So this is your zone of support and resistance there. And that takes you approximately up to market close. So once it hits this level, it's personal choice, but once it hits this level, I'd probably come out of the trade and then leave it until Tokyo or till London tomorrow. Depends what your style of swing trading is, because you'll probably be sitting in a lot of consolidation here of 16 to about 20 pip range there. Tokyo often doesn't move more than 20 pips, if you notice. So so that's what I would be doing. I'd be taking my money at here at that first level or second level.
That's what I'm looking at. That'll give me about 50 pips.
Well, that's fabulous. Yeah, great, nice trade. And as we said, it's a nice. How many pips have we got on that C to D? 105. So we've got some more to run on that, haven't we? If it goes down.
Sarah, what would the stop loss be on that? USD,
well,
JPY?
Normally I'll go for a 10 pip stop loss, because it's not.
If you get in right now, if you get in at that entry right now.
Right now, then I would probably want to give it. I'd probably want to give it above quarter theory, 15. Cover yourself above that 1.108.500. That's my personal preference.
Okay.
But you can see that 62 EMA has a strong downward momentum. Once it crosses the blue line, it's in a strong downward momentum. So, you know, some people would stay in it till it comes down to this whole next level here. Depends on your style of trading. Because once it crossed here, look how price stayed up, stalled on that pitchfork, broke back down, but broke back down through quarter theory, but only to test the 15-minute EMA. then came back up, broke through the pitchfork, straight up. Don't know if that was news, but that's often, if you're in a trade where it goes straight up or down, it can equally reverse exactly the same as you. I get very nervous about staying in trades when they're straight up or down. And then off that D point, down to quarter theory, down to the pitchfork, a long break and retest. But it did do, you know, what you like it to do, break and retest off the D point. And then look how it's respected quarter theory and the 62 down to that pitchfork. So you've got multiple trades here of this strategy. That's sorry, it's just a bit slow when I'm on Zoom. So you had, that's about only about 10 pips, but if I don't get in for a buy until it's hit the median. So once it's hit that median, it's fine for buying. Here, once it's crossed the pitchfork, the break and the retest, and it's above the 62, there's another, you know, you don't have to be in a lot of pairs to make your money. There's another 20 pips, 30 pips if you take it up to the pitchfork, 25. Sorry, Zoom makes this a bit glitchy for me. And then here it breaks back down under the 62, but it fails to make the next level. So there's only about 15 pips there. So normally I'm getting in, like this is a good point to get in. That's got the confirmations here. It's above the 62. It's done the break and the retest off the pitchfork and off quarter theory. So you could follow that up for 20, 25 pips there. Once it starts to stall and fails to get to the pitchfork, you know, to get out of the trade, you most certainly should be getting out once it broke back down there under that 62. And now we're safe while it stays under the 62 because it's the 62, as we said yesterday, is pushing it down in a strong sell. Okay, so that's USD JPY. That was a good one to look at. So I've written that down.
Sarah, is the pitchfork on correctly on the D point?
It is. I just didn't put the, because of time, and we were in a trade. I just didn't putting the pattern on. It's that pattern, but the important thing is the pitchfork is actually on that wick, end wick, on the 1 minute on the D point. So yeah, normally I will pull that pink pattern. It's just showing you the shape. I will pull it up, but I didn't bother because of time. We were trying to analyze the trade. Yeah, so sorry if that's a bit confusing, but you can see here it is on accurately. So one more to look at before we go. USD, what else was I in today or looking at? Euro USD, nothing much to say about that one at the moment. That is coming down off the, oh, this is probably confusing. Let me hide that. So it's, this is a sell. You've got the similar thing. You've got the, we are in, if you are in GBP and euros, you know, sometimes you know, you've got to be careful if you're correlating pairs, see if they move in a similar way or not. This is in a strong downward momentum coming below quarter theory. Is it going to cross that 15-minute one? Let me take off that. And then your next line of stalling out will be that quarter theory at 1.09500 there. So it's done its break and its retest down, and it looks like it wants to head on down. So once you've come below that point on a break and retest, well, it's come quite a way back up, so it might even want to come up and test that orange line. Sometimes price will come up and come right back up to that 62, which is what I was saying about being stopped out. So my next level of entry would be off this point here that I just read out. It is a big downward scan. It's in a strong downward momentum. It's in New York session. I can't remember what speed Euro USD moves at normally. I haven't written that down actually. So that's strange. Yes, I have. It's a 5, and it has a small spread, and it usually trends nicely. So quite a nice pair. So you could have a look at that for a sell after that point there. And what other one was I looking at? Euro GBP, but that's still, I did check that this morning and moved, the D point had moved. So that's now done a break and a retest off the D point, but why wouldn't I want to get into that for a buy at the moment? Anyone got an answer? Because although that's very good, it's got quarter theory and a pitchfork, so a very nice floor. Got the 62 is still pointing down, so I don't quite trust it that price doesn't want to break down even further. So if I put the hull on, which normally I don't use for an entry, but just to see what it says on the 15-minute band in the back, it's still saying the price is pushing down. So it's confirming that it's not turned yet. So that's why I don't like that for a buy at the moment. And also Euro GBP is a London pair as well. Euro CAD, AUD CAD. AUD CAD is just can't make its mind up. It's between the 62 1-minute quarter theory and the 15-minute. So that's not doing anything exciting at the moment that I can see. USD CAD, I was looking at this earlier on. Take that off for a minute. So that line there is quarter theory, where it's glitching. That's why it's done the vertical lines. It's still in an upward momentum. It's come out of an old pitchfork at the moment. But it's not, I had these alerts down here. I probably want to, but that 62 is now pointing downwards. So it looks like to me it's starting to come into a period of consolidation. But I mean, I don't know. I'm not, you know, I just go with what I can ping off. I just follow the confirmations. So it's broken down. It's probably coming back down to this level. So that's a green pitchfork and a purple one. So there's no trade for me there until it either was up there or it comes back down in these outer extensions. GA, oh, that's on quarter theory as well. Oh, GA, I was looking at this earlier. Now those were my 1-minute trend lines. If it had broken above here and carried on, then that would have been a buy. Because here's the pitchfork, break and a retest off the pitchfork. Then the 1-minute trend, if it broke down here, came under, then I was looking at selling. And in fact, that's what it chose to do, but I missed that. I think I had to go out. I had some lunch, went out with the dog. So that was the perfect entry there, I think. So I was waiting for that break and retest. But yes, because it's done the break and the retest there, and it chose to go under, but I missed that entry for that 20 pips, and now it's kind of trotting along the middle a bit, GA. So no trade. Well, it's still breaking and retesting the pitchfork, but that's now going up above the 62. So it looks like it's sort of buying again, but it's not. That was the point I was looking at it, so I'm not really kind of thinking about that to get into unless it did something like that over here. But you can see how flat the 62 is.
USD JPY's just hit 62.
Oh well, has it gone right back up? Yeah, that's what it does. That's what they do.
Yeah, let's see if it comes back down.
Yeah, well, it should do. It should, as I said, it'll want to test test either the blue one or the orange one. So now I think you're all right, because it's rejecting, it's holding, and that's a big break and retest of that pitchfork. And we are on the hour, so that's your fake out. Right, last 10 minutes of the hour, remember, that's the bankers saying they're trying to make you scared, make you think you've made the wrong decision. Take out your stop loss. See, it's dropping now. So that, again, wait 5 minutes or so. I don't want to hold Sharon up on this next session, but just let it settle down a bit. But if you're in the trade, you know, you should be fine. Let's just put the hull on for you.
All this, Sarah.
Which one?
The one you're showing us now, your pitchfork, your quarterly theory.
Well, I like it, but I just, quite frankly, some people say it looks like Star Wars, but you can hide the other pitchforks. I like it because if Vibrata or the scanner's down, I've always got a trade. Also, I just know if I click buttons, if I click quarter theory, why do I want to be drawing all those manual lines of support and resistance? I just click quarter theory at 50 pips and the pitchfork at 20 pips, the same trade over and over again. I've always got my bearings on my risk to reward and where my floors and ceilings or support and resistance are. And then the hull tells me that just flip to red. It's a lagging indicator, like most indicators. It'll lag 30%, but you can see it's flipped to red now. So, you know, price is coming back down the way we thought it would. Okay, everybody. So I hope you enjoyed today. If I can help anyone with anything, you've got any more questions, let me know. But otherwise, Chance's favorited videos, watch the first 6 over the weekend or a period of time. Ask me any questions or if you want any help. And he covers our 5 confirmations in there. And after Sharon, got Sarah going through BYOB basics later on. I think that's 3 p.m. UK time. And then Les on at 7. And the Baby Boomer Power Hour for Australia and North America with Anne and Brian at, I think that's 2 a.m. GMT, isn't it? 2 a.m. I think that's right. Tuesdays and Thursdays. So thanks very much for joining, and enjoy your next sessions. Bye.
Thanks, Sarah. Bye.
Bye.